You've got $100 and a question that most people are too afraid to ask. Can I actually start trading Forex with this? Not fantasy, not hype, just something real. Something that turns effort into skill and skill into your income. Because if you play it smart, that $100 might just be the beginning of everything. By the end of this video, you'll have a complete step-by-step plan to turn that $100 into your first shot at real trading with structure, strategy, and zero bullshit. You got $100 and you want to trade Forex. You're not trying to gamble it, you're trying to actually grow it. That means you need a clear plan, not some flashy nonsense. This isn't about getting rich overnight. It's about learning how to trade without blowing your money. That $100 is your testing ground. Small enough to manage, but real enough to actually matter. You don't need a big account to trade like a professional. You need structure, you need rules, you need to treat every trade like it matters, because it does. Most people blow their first account not because they're dumb, but because they jump in without a system. They skip the boring parts, they chase the profits, they ignore risk, and they blame the market. But the market's not the problem. The problem is no one ever taught them how to build from the ground up. And that's what this video is. A clear, no BS blueprint for how to actually start trading with $100 and not destroy yourself doing it. Step-by-step, small account mindset, professional level discipline. If you're ready to stop guessing and start executing, this is how. And if you're already thinking $100 isn't enough, that's the exact mindset that guarantees you'll lose it. You don't need more money, you need more skill. And that starts right here. Step one, you do not start with real money. That $100 you've got, that's not your opportunity, it's your responsibility. Your only job right now is to learn without risk. You open a demo account, it costs nothing, it's instant, and it gives you access to real-time price action with zero downside. If you can't make decisions under pressure in a demo account, you're not ready for the real thing. This is your testing ground. This is where you learn how the platform works, where to place orders, how to set a stop loss, how to close a trade, how spread affects entries, all the mechanical stuff most beginners completely ignore until it costs them real money. You don't want your first live mistake to be something dumb like forgetting to set a take profit. More than that, demo is where you start thinking like a trader. It's not about pressing buttons, it's about reading momentum, understanding structure, waiting for confirmation, not reacting, but executing. If you treat a demo like a toy, it won't teach you anything. But if you treat it like your prep ground, you'll build muscle memory that carries over when it actually counts. While you're trading in that demo, you study the game. And I don't mean scrolling Instagram for one-liners. I mean real structured study. You start with babypips.com. It's completely free. It's simple, and it covers everything from beginners to advanced. Start at lesson 1. Don't skip ahead. Study how price moves, what a pip is, what leverage does, how different sessions work. London, New York, Tokyo, learn how different pairs behave. Euro USD isn't the same as GBP JPY. Every pair has its own rhythm, its volatility, its own tendencies. And knowing that helps you stay out of the setups that don't match your plan. Next, you create a study log. Every concept you learn, write it down. Not just the definitions, but write out examples, what it looks like, when it works, when it fails. You're building a reference sheet, not a textbook. You should be able to pull up your notes and remind yourself how structure looks in an uptrend or what risk to reward should be before entering. Once you've got the basics, you move into chart replay mode. Many platforms let you scroll back and stimulate the market bar by bar. This is where you test what you've learned in a controlled setting. You find a pair, pick a time frame, scroll back, and trade it forward as if it were live. This builds pattern recognition fast. You start to see how support holds, how breakouts fake out, how entries form before momentum actually kicks in. None of this costs $1, and no real capital is at risk. But every minute you put in here is saving you from losing later. This is your buffer, your safety net, almost like your training camp. If you're brushing this off because it's not flashy, you're not gonna last. This is where real traders are built. Quiet work, boring repetition, and sharp habits. And that $100, it'll still be there, but you'll be ready to actually use it the right way. You've put in the work, demo trades are done. You now know how to place an order, set a stop loss, manage a chart. Now it's time to go live. Your first move, you pick a broker that's built for small accounts. Not every broker is. You need one that offers micro lots, 0.01, or even nano lots, 0.001. That means you can trade a smaller position size so your risk stays tight. If a broker's minimum lot sizes forces you to risk $5 or $10 per trade, it's a no with $100. You need precision, not pressure. Check the broker's regulation too. Stick with brokers licensed by actual financial authorities like the FSCA, ASIC, or the CFTC. That's what keeps your money safe. And always read the fine print. Look for hidden fees, withdrawal limits, or inflated spreads. If it feels shady, it most likely is. Now, I even have a broker that I'm gonna recommend to you guys that all my students use all around the world. I'm gonna link it down below. Once you've got a solid broker, your next step is setting up your leverage. Leverage multiplies your buying power. 1 to 50 means your $100 controls 5,000. 1 to 100 gives you access to $10,000 worth of currency. Sounds powerful, and it is, but the power goes both ways. Leverage multiplies your wins, but it also multiplies your losses. If the trade goes against you and you're over leveraged, the loss is immediate and brutal. You want to get used to leverage that supports your strategy, not wrecks your risk. Here's the play. Use 1 to 30 to 1 to 50 leverage max. This gives you enough margin to open trades and manage risk, but it won't drain your account with one mistake. Also, know what your margin requirements are. This is how much of your account is needed to hold a position. If your broker forces you to over margin just to place a trade, you're walking into danger every time you click buy or sell. Now, let's take risk management, the part that separates real traders from the broke ones. This is a non-negotiable. Every trade you place should follow one rule. Never risk more than 1 or 2% of your account. On a $100 account, that's $1, not 10, not 25, 1. Here's why that matters. With a 1% risk, you can lose 10 trades in a row and still have 90% of your account. You're giving yourself space to actually learn. You're avoiding emotional damage, and you're treating trading like a long-term skill, not a lottery ticket. To keep your risk consistent, you need to use a position size calculator. There are free ones online. Just Google Forex position calculator. You input your stop loss size, your account size, and your risk percentage, and it tells you exactly how big your trade should be. I will even link one below that I use so you guys can check it out. Now, you should never guess this. Guessing gets you smoked. Calculate your risk, set your stop, walk away. It's boring, it's discipline, and it's the only way to survive long enough to actually get good. If this sounds too slow, ask yourself something. Would you rather take 100 smart trades over 6 months, or blow your account in one afternoon trying to flip it? This game rewards patience, not pressure. If you can control your risk, you can control your outcome. At this point, you've done the groundwork, you spent time in demo, you've tested the process, you built structure, and practice execution. Now comes the most important part. How do you build your edge? An edge isn't luck. It's not a guess. It's a repeatable behavior that works over time. And building one starts by simplifying your focus. Pick one strategy, master the conditions where it works. Now know exactly what it looks like when it appears and then when it doesn't. The goal is clarity, not variety. Your strategy starts with technical structure, market direction, price zones, clean confirmations. Understand where price reacts. Know how momentum builds. Wait for the same visual cue every single time. You use an indicator, use 1, not 5. Now, as advanced as I am, I use multiple, but I learned 1 at a time. You have to train your eyes. Your eyes should be reading price. You're training to see the market with discipline, not with clutter. Next, choose your market. Stick with one currency pair or something stable, something you can study deeply. Euro USD is ideal. It moves well, respects structure, and it's one of the most liquid pairs in the world. Study how it moves, learn its rhythm, and don't touch another chart until this one is mastered. Then choose your time frame. Don't bounce between 5 different time frames. Pick one, 15-minute, 1 hour, or 4 hour. Base it on your schedule. What matters is that you see the same structure, the same time, day after day. Now, you've got your setup, your pair, and your time frame. Study how it behaves during your chosen trading session. London, New York, you learn when volume hits. You learn when to stay out. That's how you build repetition. That's how you're gonna build confidence. Here's your workflow. Scan the chart, wait for your setup, plan the trade before you actually enter, place the order with precision, set your stop, set your target, walk away. If it wins, you log it. If it loses, you log it. And either way, you move forward. This system is your template. Run it in demo until it's automatic. Then, and only then, you should move to live. Start small. $100, same pair, same setup, same rules. Don't change a thing, just execute. Track every trade, measure your performance, and know your win rate. Know your reward to risk. This gives you actual data to grow from. Not guesses, not emotion. After 30, 60, 90 days of consistent execution, now you're not a beginner anymore. Now you're a trader with a system, with a logbook, with experience. From here, you can scale. You can apply for a funded account. You can grow your capital. You've proven you can control the account size you have, which means you're ready for more. That $100 wasn't just capital. It was a mirror. It showed you what kind of trader you are when the pressure is low, so you can become who you need to be when the pressure is high. The profits will come later. What matters right now is the proof. Proof that you can show up, follow structure, manage risk, and stay in control. Proof that you can trade with patience, not emotion. And that mindset, that's the real capital. because anyone can open a chart, but only a few know how to survive it long enough to win. And now you do. That's it. No hype, no shortcuts, just the plan to grow $100 the right way. And if you follow the steps in this video with discipline, you'll be ahead of 90% of traders before you even risk $1. Because this isn't about the money you start with, it's about the habits you build while you're small. And those habits, they scale. And if you want a little extra help, I'll link my course info on my one-on-one mentorship below. Now, if you got some value from this video, please hit that subscribe button, and I'll see you in the next one. Love you guys. Peace.